We're all looking for that edge when it comes to investing, aren't we? That little secret that gives us a real leg up. Well, what if I told you the key isn't some super hidden data, but just a different way of looking at the numbers we already have? Today, we are going to unlock a powerful tool that really can be your secret weapon. It's something that protects you from one of the biggest investment traps out there, overpaying for a stock.
Okay, think about the last annual report you read. It feels pretty official, right? Solid. But here's a better way to think about it. It's a museum piece. Seriously. It's a snapshot of the past, all carefully curated and framed. And let's be honest, in the world of investing, where things move at lightning speed, making decisions based on something from a museum, well, that can be a really dangerous game.
So, this is a question we've got to ask ourselves, straight up. When we're relying on that annual report, are we actually using a relic? Are we investing in a company's history instead of its present-day reality? It's a huge deal because an unbelievable amount can change in just 1 year. And that leads us right into what you could call the annual report's trap. See, the real danger here is that you're basing your hard-earned money on financial data that could be over 12 months old. In a market that changes by the second, that's practically an eternity.
This analogy just hits it perfectly. You would never, ever buy a car based on a picture from a year ago, would you? Of course not, especially if you heard a rumor that the engine started smoking a few months ago. And yet, so many investors do the exact same thing with their money, completely ignoring the financial engine smoke that's appeared long after that glossy report was printed.
All right, so if the annual report is an old, dusty photograph, what's the alternative? Well, this is where we bring in a much, much sharper tool. Let's talk about TTM. I want you to think of it as the live stream view, giving you a direct, real-time look at how a company is actually doing today.
So what is TTM? It stands for trailing 12 months, and honestly, it's not some complicated Wall Street formula. It simply takes a company's performance, its revenue, its earnings, from the most recent 4 quarters and stitches them together. And what do you get? You get the most current, the most up-to-date 1-year picture of that company's financial health. It's that simple.
Let's break down the difference, because it's huge. The annual report, it's static. It's potentially ancient news, and it's often a filtered snapshot, the highlight reel from last year. TTM, on the other hand, is live. It's always current. It's like the raw, unfiltered video feed of what's happening right now. So I'll ask you, which one would you rather use to make a decision? But TTM is more than just current data. It has this incredible ability to just slice right through the sugarcoating that you sometimes find in official reports. It exposes what a company might be trying to, sweep under the rug. A fantastic way to think about TTM is as a kind of financial truth serum. It literally forces the numbers to tell the whole story, not just the convenient, pretty parts. It just strips away all that marketing spin and gives you the unvarnished reality of the business. So how does this truth serum actually work? Well, in 2 key ways. First, it exposes what we call one-hit wonders. Let's say a company has a fantastic annual report just because they sold off a building for a huge profit. TTM looks at the last 4 quarters and says, okay, that's nice, but what about the actual business? Is that growing? Second, it neutralizes seasonal masks. For a retailer, the holiday quarter always looks incredible, right? But TTM averages in the slower months, giving you a much more realistic picture of their actual year-round profit. Okay, this is the most important part. All this analysis is interesting, for sure. But what really matters is how it affects your wallet. The single biggest, most important power of TTM is its ability to stop you from paying way too much for a company whose best days are already behind it. Let's just walk through this example because it is so powerful. Okay, the stock price is $100. Based on last year's annual report, the company earned $10 per share. That gives you a price-to-earnings ratio, or a PE, of 10. And you think, wow, that looks cheap. But hold on. The TTM data shows that in the most recent 12 months, earnings have actually crashed to just $2. All of a sudden, the real PE ratio isn't 10, it's 50. 50. The stock just went from looking like a bargain to being a dangerously overpriced fading star. And the only reason we know that is because we chose to look at the live stream instead of the old photograph. I mean, that is the kind of massive mistake that can absolutely destroy a portfolio. TTM is your defense against it.
So look, this isn't just some abstract theory. This is a practical tool you can and you absolutely should start using right away. Let's make this your new investing rule. Before you put any money on the line, you always check the TTM.
And TTM has a couple of other little superpowers that are worth mentioning. You can use it to spot slow leaks. Just compare the TTM from this quarter to the last one. Is the company gaining momentum or is it fading? It also lets you make true apples-to-apples comparisons. See, different companies have different fiscal years, which can be confusing. TTM standardizes everyone to the same recent 12-month period, so you can see who is really the top performer in an industry right now.
And you know what the best part is? You don't need some expensive subscription service or a finance degree to find the stuff. It is widely available, totally free. You just have to know where to look.
All the big financial websites like Yahoo Finance or Google Finance do the math for you. Just pull up any stock and look for the Statistics or Summary tab. Or if you use a stock screener, you can actually filter for columns that are labeled with TTM. The information is right there, just waiting to give you that critical, up-to-the-minute perspective.
And really, this is the bottom line. It's the perfect way to sum all of this up. An annual report is a history book. It tells you where a company has been. But TTM tells you where it's standing right here, right now. It's the difference between looking in your rearview mirror and actually focusing on the road ahead. So, the next time you're about to buy a stock, I just want you to ask yourself this one simple question. Are you going to trust that old museum piece, or are you going to do what smart investors do and check the company's pulse first?